Hello everyone, Nick here. Welcome to the show if you're new. Thanks for coming back if you're not. We have a ton of breaking news to cover in today's episode. We're going to be talking about some news coming out of NIO HQ, the reasonings behind their drop in deliveries throughout the month of May, a leaked document stating their projections on their ET7 and deliveries moving into next year. We're also going to be briefly covering XPENG and Li Auto and why investors are swarming back to these stocks. Will we see the continued investor interest moving throughout Q2? We may well indeed be witnessing the full bull force of the EV space once again, and especially the Chinese startup EV space. It is a very good time to be a clean energy investor. Before we get to it today, Webull is giving out 2 free stocks worth up to $1,850, all for free. Just by using the link in my top comment. You really don't want to sleep on this one. It's a win-win. You could trade before and after hours markets. We all know the early bird gets the worm. All right, folks, let's jump right into it. So shares on NIO's trading period today were quite volatile. We finished the day at 43.56, down 12 cents, 0.27% loss. However, we saw the other big 2 electric vehicle startups in China, Li Auto and XPENG, both finished the day in the green. XPENG finished up 3.36%, up just south of $40, and Li Auto, a big day on the markets, 6.71% surge, up $1.79 to just south of 30. Now, many investors are wondering whether it is time to move capital out of the big dogs, NIO and Tesla, which have been hogging the spotlight, and reallocate into the lesser covered stocks like XPENG and Li Auto. We can see that since the recent lows experienced across the EV industry a few months ago, Li and XPENG have greatly outperformed both NIO and Tesla, up around 60% each. Now, I personally believe in the power of diversification. I am invested in all NIO, Tesla, XPENG, and Li Auto. They all operate quite differently from one another, NIO operating the furthest from the bunch in my opinion. I like to reduce risk while exposing to potential gains, and I am not selling any of these recent NIO gains. I've said it before and I will say it again that I do think NIO will break into the triple digits in 1 year's time, and I am holding for the very long term. Now, getting into some news coming out of China. Investors and analysts were under the impression that May delivery figures had dipped slightly for the second month in a row due to the ongoing semiconductor shortage. However, this is now appearing not to be the case. I was actually unsure of how investors were going to react to this news. On one hand, the chip supply is a negative for the company moving forward. However, the drop in sales being attributed towards an external factor, like semiconductors, and not internal management or their business ops, sort of granted the company an out. Now, it appears that this is not what caused the dip. The actual reason, much more bland. The State Taxation Administration, or the STA, made a change in China's auto invoicing rules, and this is coming from NIO's president and co-founder, King Li Hong. The new rules slowed NIO's delivering process by about 4 working days. Now, any change to NIO's well-oiled machine tends to set back production and deliveries, and here we are once again seeing the manifestation of this. Now, moving forward, this is expected to be overcome in the short term. The company has maintained its guidance in Q2 deliveries at around 21 to 22,000 units. This, after the 2-month slide, would have NIO delivering a record-breaking quantity in June, something I am extremely excited to see come to fruition. I do think investors will react very positively to this. Kin Li Hong went on further to state that the company has more than 10,000 orders simply awaiting delivery in June, which signifies that demand remains at all-time highs. So once these short-term issues are solved, the delivery process should once again return to normal. Very bullish outlook here. Now, while we're on the topic of delivery numbers, we all know how massive Q1 2022 will be for this company. This is typically when auto sales are the highest in China. This also represents the release of NIO's first sedan, the ET7, equipped with their 150 kilowatt-hour battery. This will enable up to 1,000 kilometers NEDC range. They'll also likely have more than 500 battery swapping stations operational and will also be delivering in Europe We'll have their new factories. What is not to love about Q1 2022? Now, NIO's future success heavily relies on the ability and performance of their ET7 to deliver. I've been saying for months now that I do think this model will quickly climb the ranks and become their highest selling model, and this appears to be correct. We have seen the Chinese consumer moving to favor sedans and smaller vehicles. New information just leaked out is revealing that this may in fact be true. We had speculated following a leak previously emerging stating that the company had experienced an all-time high record for the quantity of ET7 pre-orders. Just today, we are finding out that the minutes from a meeting from NIO's motor component supplier were leaked to DDXQ Tech, showing insight into their demand for next year and confirming timelines. And I quote, "The NIO ET7 will enter the market in the first quarter of next year, and we will start supplying it 2 months earlier. The ET7 target for next year is 50,000 units, and motor demand is expected to be 100,000 units." Unquote. The date showing June 4th. This is absolutely massive news for the company and for investors if unadulterated. This would lead to an average of 4,167 ET7s per month, shooting it immediately into their top spot in terms of units sold. Just to give this some reference, NIO's current top-selling model is their ES6, which sold just over 3,000 units in May. Now, NIO will likely be selling more than 10,000 units per month steadily in 2022, so we'll have to watch that demand will increase proportionally. However, I do think it will. Now, looking at XPENG, we see a different story over the past 3 months. Their deliveries have steadily increased over the 3 months we saw NIO steadily decreasing deliveries. Is this a change in sentiment? Now, whether XPENG was hinged to the same effect on the new delivery process that NIO was still remains unclear. We have virtually no insight into this. However, it sure is bringing in investor interest. The company recently unveiled their first flagship experience center, showing a massive shift in branding and an upgrade overall. I personally think this is great for the company. I did think their branding was previously lagging behind some of their competitors. It's quite sleek, it's beside a revamped Apple store, and located in a trendy, young area of Beijing. The company has also stated that they may be able to beat second quarter guidance, whereas competitors like NIO are simply maintaining. The company's president, Brian Gu, stated that they are on track to meet or beat Q2 delivery numbers, which he attributes to growing EV demand in China. I do think their P7 is an incredible unit for their price, and I do think there is a market for XPENG and Li Auto to hold in China. This is a rapidly growing market. There is plenty of room to run. XPENG is also releasing a new vehicle, the P5, which has investors extremely excited. We see the same thing with Li Auto with their Li 1 2021 edition. I really do think we are just seeing the return of the bullishness. I do think the consolidation period is over. However, I think we'll remain in the mid-40s moving through the rest of Q2. Investors are eager to see how the chip supply will pan out, if this will hinder into Q3, or if companies will begin to ramp up production moving into Q3, Q4, and into 2022. Don't forget about the Webull promo, 2 free stocks worth up to $1,850 for free. You could trade before and after hours markets. They are 0% commission. All you have to do is use the link in my description. You really do not want to sleep on this one. Anyways, folks, I'll see you all in the next video. Take care, happy trading, cheers.